Hello everyone, I'm John, lead analyst and founder of JP Strategic Investments, and today I'm going to walk you through our bullish thesis on Google. First, I'll go through the fundamentals, then the financials, and finally we'll get to how we think the stock will perform based on our analysis. Also, as just a quick note, even though technically the actual parent company is Alphabet, throughout this presentation I'll be referring to it as Google stock, because that's what most people are familiar with, and if we're being honest, that's really what you're investing in. So let's dive right in. The first reason that we're bullish on Google is that we believe that the shift to online advertising is not over, and that online advertising will also continue to get more expensive. While most companies today employ a large degree of online advertising, there are still billions of dollars that are spent on outdated advertising platforms like television, billboards, and radios every year. In fact, in 2019 alone, over 20% of all ad spending in the US was spent on television ads. We aren't implying that all of this advertising will move online, but over the next 3 to 5 years, we do believe a large majority will. TV ads just can't offer the advantages that online advertising does. With online advertising, companies have the ability to target hyper-specific audiences and choose between a variety of advertising methods like video ads, clickable ads, or promoted posts. Not to mention that online advertising also offers a much wider array of pricing options and campaign budgets, which allows small businesses and individuals to advertise with very low budgets. None of these things are available on TV ads or any of the other outdated advertising platforms. For these reasons, we expect the continued shift in online advertising to last the next 3 to 5 years. This influx of advertising will also cause online advertising costs to rise as demand outpaces supply. All of this means that Google's ad revenue should continue to have strong growth over the coming years. The second reason that we're bullish on Google is their cloud computing business. Cloud computing is the use of remote servers that are available on demand, generally for data storage and computing. This may seem like something the average person never deals with, but if you have Gmail, a Google Drive, iPhone, or any number of other devices or applications, then you probably use cloud computing. All of the data on these devices and applications is stored and computed in the cloud. Also, any website or app that has interactive functions that allow users to input data and get a result most likely uses cloud computing services. The market for cloud computing has been skyrocketing over the last 5 years, and it's not stopping anytime soon. It's currently valued at just over $200 billion annually and is projected to be worth over $700 billion by the end of 2027. Google has been chipping away at Amazon's majority stake of the cloud computing market and is estimated to currently own about 8% of the global market share. Assuming they simply hold on to this portion of the market for the next several years, their cloud revenue alone could reach almost $60 billion by 2027. That's a 600% increase in their cloud revenue from 2019. Cloud computing should easily drive strong growth in revenue and profits for Google over the next several years. The third reason that we're bullish on Google is the amount of data that they collect and process through their AI. Google is by far and away the most used search engine in the world. In fact, they might as well be the only search engine in the world. As you can see from these statistics here, Google receives over 63,000 searches per second on any given day. Their AI records each of those searches, which websites people clicked on after that search, how many pages they viewed on that website, and so on. This allows Google to tell exactly what content people want for different keyword searches, and means that every day the Google AI is getting better at showing relevant search results. The same is true for YouTube as well. The AI looks at how long people spend watching the video, whether they hit the like button, and a variety of other metrics that tell it which videos are the best videos for each keyword. No other search engine in the world collects anywhere close to the amount of data that Google does. This is a huge competitive moat and keeps any other search engine from taking Google's market share. The last reason that we're bullish on Google is their collaborative and education segments. In our opinion, Google's G Suite is the best in the industry for businesses and schools. We have a unique insight into this industry because members of our team have educational experience and have used multiple platforms, including G Suite. We believe that G Suite is superior to other programs because it offers far more features at a lower price. With G Suite, schools and businesses get access to all of Google's applications, including custom Gmails for employees, Google Meet for video chats, and unlimited Google Drive storage. Schools also get access to Google Classroom, which our research says is the best platform available for assignments, grading, and weekly parent updates. Google's G Suite will also benefit immensely in work from home and distance learning situations. With many businesses and schools switching some or all of their employees online, Google stands to gain a huge number of new customers. Many schools and businesses scrambled to make the transition online as COVID-19 caused stay-at-home orders, and they went to the first platform they could find. Now, as schools and businesses get the chance to reevaluate their options, we believe that many of them will make the switch to G Suite. All right, well, now that we've covered the fundamentals, let's take a look at the financials. As you might expect, Google's financials are great. Revenue and profits have shown strong growth over the last several years, and their balance sheet and cash flow also remain strong. So, with this in mind, we arrive at the big question: where will the stock go? Well, we believe that if the growth vectors that we have laid out above continue as we expect them to, then that should push the stock to our short-term price target of $1,900 per share over the next year or so. Long-term, we think that this growth should push the stock to roughly $2,600 per share over the next 3 to 5 years. Well, that concludes our presentation on Google stock. We hope it was helpful to you. Always remember to do your own research before making any investments, and don't forget to check out our website and YouTube channel for more stock analysis and trade information. Have a great day, everybody.